Everyone, I'm the Tax Pro, and today is day 9 of 90 Days to Taxes, where I am taking new businesses or businesses that are just organized or pretty much anybody in between, and I'm helping you get organized for tax season, get ready to file your taxes, and make sure that you're claiming those deductions with confidence. So let's go over today's topic, which is how do we categorize our expenses? In the last couple of videos, I've talked about expenses and specific things that are deductible, specific items that aren't. I'll have a couple more videos about specific expense categories in the future. But let's kind of talk about how do we know how we're categorizing these expenses, right? So there's a lot of different expenses that you may have in your business, and how do we know what we should call them? How do we know kind of what pockets to put them in? Because we have to total these amounts for the year in order to claim our taxes or claim them on our taxes and know what we even owe. So we want to make sure that we are setting up what we call our chart of accounts properly. And that chart of accounts is going to list all the different types of accounts that you're going to use in your bookkeeping system. Some of those are going to be expense accounts. And so let's talk about expenses and what categories we really need to break these out in to help us understand how we are claiming these or how we're writing them off. So I like to start with Schedule C. Schedule C is our profit and loss from business. This is our sole proprietorship, and I think it does a really nice job of kind of showing you some samples of expense categories, and it's a great place to start. So this is not the end-all be-all list of expenses. This is a great place to begin when it comes to putting your expense list together. The IRS has separated out some specific expense items that they're interested in. If you are filing as a partnership, S corporation, or C corporation, your list is going to look extremely similar to this. Those tax returns don't have as many of these pulled out, just because it's assumed that if you're doing those more complicated returns, that you have a little bit of a better idea of the types of expenses that you should be itemizing. So this isn't an extensive list or an exhaustive list, but it's a really good place to start. So we'll start here in part 2, where it says expenses, and we'll start with advertising. So any sort of advertising, pay-per-click, all that good stuff, you can total it here and put it on line 8. One thing to keep in mind is that the IRS likes to separate out these amounts because the IRS likes to compare in your industry how much are you spending on advertising versus your gross receipts. And they like to compare these different expense amounts. So are you spending a lot more on insurance than a lot of people in your industry? If so, why? What about office expenses? So they like to have these kind of separated out. So we have advertising. Car and truck I'm going to go over in another video because calculating that is a little weird. Commissions and fees, if you have salespeople and you're paying them commissions or you're paying some sort of expense for them to bring in those sales, that would go here. Contract labor. So notice that there's contract labor and then there's legal and professional services. So legal and professional is going to be third parties that are providing like a set of services for you, whereas contract labor is going to be more that set of services is helping you make money. Depletion and depreciation on line 12 and 13. Those items I'm going to cover in a different video. Depreciation is kind of a complicated topic, and there's a lot of different things that we can do, like bonus depreciation, section 179, all that good stuff. So I'm going to talk about that later. Employee benefit programs. So these you want to separate out and kind of show what you're paying as far as benefits. Insurance. This is other than health. I'm going to have a video on health insurance because health insurance is claimed differently depending on the type of business that you have. But most businesses carry like general liability insurance and that kind of stuff. That's going to go there. Maybe workers' comp. Interest. So if you have interest that you've paid for various loans or something like that, interest goes on there. There tends to be limits on interest, which is why it says see instructions on there. Legal and professional services I've already covered. Going up to line 18 is office expense. Office expense kind of tends to be this like catch-all. I like to split out if you have like large components of office expense that are very industry specific groups of expenses. Maybe you have a really heavy software use in your business. Your industry just requires a lot of expensive software. I'd split that out and I would put software in the other expense categories I'm going to show you here in a minute. Rent or lease, if you're renting an office or a shop, if you're renting vehicles, machinery, equipment, all that good stuff, that goes under rent or lease. You can break out the rent too. So when you're designing these categories, I want you to think about how is this easily going to flow onto a tax return, but also I want you to think about how is this going to help you run your business, okay? So sometimes like we'll split out rent because it might be important to understand like how much a client is paying to rent machinery versus what they're renting their shop for, because if the machinery is out of control, you know, it might make it look like that shop rent is really high, and we want the client to know where their money is going, what they're spending a lot of money on. Don't make it super, super complicated. If you start getting like pages and pages worth of expenses, that's just too much. It's too hard to analyze. But, you know, split these out into some separate categories. Advertising, for example, might be like a pay per click versus organic versus, you know, general marketing or something like that, or brand recognition. Okay, so back to line 21, now that I went kind of off on a little side quest there. Repairs and maintenance. This is repairs and maintenance for, you know, your office, your shop, or your machinery, all that good stuff. Supplies, so you don't want to include the supplies that we're going to have in the cost of goods sold section because that goes elsewhere on the tax return. But any sort of supplies that you have, taxes and licenses. You want to make sure that you are claiming the appropriate taxes on the appropriate returns. So for example, if your state has a state business return, most likely you can't claim the income tax that that business paid on the tax section of that state tax return. So make sure that the taxes that you are applying to each tax return are appropriate for that tax return. You probably cannot write off the taxes to that specific taxing jurisdiction on that taxing jurisdiction's tax return, okay? Travel and meals. So I'm going to discuss meals in a different video of its own because they can be kind of complicated. Utilities are going to be, you know, electric, water, sewer, all that good stuff. Wages, so any sort of W-2 wages that you have. And then you'll notice that line 27A says other expenses. And that is because the IRS fully expects that this is not going to be an exhaustive list for you. And they give you a nice little place to put more expenses. You can do more line items in this if you want. You can have a whole separate statement attached to your tax return if you want. When it comes to partnerships, S corporations, C corporations, you're not going to see that part. You're not going to see part 5 because the IRS expects that you know that you can attach a statement, okay? So you'll just attach a statement to those returns, but you can certainly do that on this too. So that's a nice area that kind of gives you some ideas on your chart of accounts. Now let's go down to cost of goods sold. So these are direct costs that are directly attached to providing specific services or producing specific goods. Things that are going to fall under cost of goods sold is going to be inventory, cost of labor, materials and supplies specifically for the services or the products. So that's kind of a separate section that the IRS has. All businesses that are producing products or that are selling products have cost of goods sold generally. Service businesses, for the purposes of the Internal Revenue Code and for the IRS, generally we don't claim cost of goods sold for businesses that are providing services. So just keep that in mind. So that is a kind of quick rundown of expense categories that you can use. Now, this is not an exhaustive list. So what I recommend doing is take a look at this, and then I recommend Googling like chart of accounts for your specific industry. Oftentimes you'll get some really interesting information on recommendations on what categories you may find helpful for running your business. There's a lot of great chart of accounts samples on Google. The other thing is, if you are using a bookkeeping software like QuickBooks or Xero or something along those lines, a lot of times they'll have sample chart of accounts for your industry. So when you go to set up your bookkeeping system, it will give you a sample of the chart of accounts that it thinks is going to fit your industry in an effort to help you. Not perfect, going to need modified, but it's a great place to start. So I'm going to go over some of these other expenses in more depth in future videos. Hopefully this was helpful. If it was, please consider liking and subscribing. If you have any questions, feel free to comment, and I will see you guys next time.